What's going on, Hustle Nation? It's Johnny here. Today we're going to be talking about how to invest in Indian stocks. India's been on fire lately, right? It's all in the news and everything. India is developing quite rapidly, and in my opinion will be growing quite rapidly in the next decade or so. But I said the same thing about China, so I was so far wrong about that. So don't believe a word I say. Don't believe anything that anybody says on the internet. Make sure you do your due diligence. I'm not a financial advisor, etc. But today we're going to go through several, probably 6 or 8 different ETFs, exchange traded funds. Take a look just to filter out. We're not going to do a deep dive on it, but we're just going to filter out yes or no if we would consider if I would consider investing in it and why. And at the end, I will show you which one I pick, and then do a deep dive on that in a separate video. Okay, so let's go ahead and get started real quick. I've got pulled up the 8 different ETFs here that I'm looking at. The first one here is the iShares India 50 ETF, which measures the top 50 companies by float market capitalization. So the top 50 big companies, all right, in India. So this particular ETF, the ticker symbol is INDY, Indy. Let's take a quick look. The performance, it's been doing really good past year to date. Today is December 17th, 2023. Year to date from January 1st, 2023 to now, 15.5%. 1 year from last December, 14.13. And a 3-year, 9.45, which is not too bad at all. Let's see what it is comprised of. The holdings, so top 50, right? Holdings, it's got mostly financial services, a little bit energy and technology. So financial services, energy, technology, consumer defense. Let's look at the top 10 holdings. Bank, Reliance Industry is the big company there. ICC Bank, another bank. Infosys, don't know. Tata Consultant Services, that's a big, that's the biggest consulting service in India. I do work with some people in India, and they gave me a lowdown on that. That is pretty big and a profitable company. Axis Bank, looks like a couple of banks, of course. So that's where you get the heavy financials. Okay, so we're going heavy on the banks there. Let's look at looked at performance. Let's look at the summary real quick. Filter. So PE ratio is pretty good, 24.19 for growth companies. That's all right. Tad bit high. Yield, not much of a dividend. Here's where I stop. 0.89% expense ratio. So that is too high. So what we're looking at is $89 for every $10,000 you hold per year, so $8.90 for every $1,000. No, I mean, it might be good for you based on the returns. Up to you totally. You're going to do it or not. You know, it might be worth it, but as Charlie Munger and Warren Buffett say, expenses will eat your lunch. Okay, so that is high. I try to keep it under, I try to keep it under 0.25%, but for certain circumstances I will do maybe up to 0.5% maybe, but never that high. So not for me, but put it on your list to research further. Like I said, INDY, cutting that out. Let's just go ahead and look at the next one. Same kind of thing. Wisdom Tree India Earnings Fund. Okay, so probably the same thing. Performance. Wow, look at that. 24.5% year to date, 23% 1 year, 15%. That's really good, really good. It's probably better than the S&P. Let's look real quick on the S&P. So what is it, SPY? Let's compare to, so yeah, 3-year, but let's look at the 10-year, okay, 15%, 5-year, 10%. So what is this one here? 10-year, okay, not so good. 5-year though, 12%. So, and like I said, I'm thinking that India will be up and coming. So this might actually be worth it, but let's go back. I'm going to put a question mark here because this too is incredibly high. Expense ratio, so 850 per thousand, $85 per $10,000. If I put $10,000, if I'm holding $10,000 with it, I'm paying $85 a year. I don't think so, but you know, you decide yourself. EPI. Okay. The next one, we looked at the S&P. We'll leave the S&P over here for just so we can have a baseline. So this next one, Nifty, the Nifty 50. That's the top 50 Indian companies. So PE ratio 2276, not too bad. Expense ratio really high. Let's look at the holdings and performance. Holdings, financial services, consumers, basic materials, energy, technology. So it looks a little more balanced out than the others. So the top 10 holdings, Moto, petroleum, so gas, auto, energy, car manufacturing, Tata. Tata is a conglomerate. They do the Tata consulting, like I told you on the other one. More motor companies. So we're looking at automobile companies, life insurance, Airtel, don't know, hospitality. So let's look at the performance. Wow, pretty good. 22, 21, 15. Really good, really good. So, you know, like I said, it might be worth the expense ratio to you, but it could go down, of course, and it could be sucking your money. I don't know, but not for me. Okay, so remember 0.89 was the highest, and then 0.8. Okay, here's we're looking at 0.78, also a little bit high. A lot high, right? Let's look at the performance. But, you know, I mean, you pay for a 20% return, 18% return, 11% return, but still, you know, the S&P is doing that. 3 years doing a 10%. 5 year is doing that. 10 years doing that. So 5 year, 15%. And this, you know, the expense ratio is not on the S is not high. So look at this, 0.009. So $9 for every 10,000. So 90 cents for every 1,000, right? So not even a dollar, right? 90 cents for every 1,000. So $9 for every 10,000. So that is, so $9 if you're holding the S&P for every 10,000. Here, $78. So $9 or $78 for $10,000. No, I don't think so. But keep in mind, I mean, it's up to you, right? Not me, though. I'm going to pass on the pen. Profit may be worth it, right? Maybe not. On a down year, who knows? So the next one is Growth Leaders, GLIN on this one. Same thing. The expense ratio is getting down, so $77 for every 10,000. Still high. Holdings, a lot of technology, financial services and industrials. Coal, energy company, technology company, finance company, Tata Consulting again, consulting services, pharmaceutical company or something, India Bank, Motors Bank, another bank. So price to earnings, okay, so performance, look at that, that's pretty good, 34, 32, 12, I'll definitely take that. But that PE is really low. Look, okay, so it's pretty cheap. That's the balance. It's cheap. So I'm thinking that it has an upside, right, to it, but it's too expensive for me. You think about it and leave a comment below. You think this one's worth it or not? Let me know why. 77, it's a little high. Okay, so Glenn, I thought about it, but not really. Inco, Columbia India Consumer. Same thing, 7.75, a little bit high for me. Holdings, lots of defense. Okay, so defense. So Nestle, India, so food, consumer products, don't know. Unilever, consumer staples, food company maybe, automotive. So a lot of consumer type stuff. Okay, performance. Wow, look at that, 30% year to date. 20, it's on fire for the year, but you can't go with the year, right? You got to go with long term if you're holding like like we plan to hold. So 3 years at 12%, 5 years 3. So, you know, that was the breakout 3 years, and now it's going up, 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 up. So 1 year and then year to date. So pretty good. Still, what scares me off is this $75 for every 10,000. That just sucks up your profits. Yep. So you think about it, Inco. Leave a comment below. Tell me if you're into that or not. Small caps. Okay, small caps seems a little high on the price to earnings, 25.74. I'm already looking at that no. But, I mean, it's killer returns. I mean, if you invested in this at the beginning of the year, you're making 30%, you'd be a real happy person, wouldn't you? 3 years, 19%, that's awesome. The 3 year, look, we're seeing a pattern. So, yeah, I mean, a 3 year return, I'll take it. Wow. So if you put in 10,000, right, and you're making 19% every 3 years, but you're paying out, if you had 10,000, you're paying out $74 for every 10,000 every year. So in 3 years, what is that? 74 times 3 is a lot. So I don't think so. Not for me, but leave a comment below if you like S-Men. And finally, FLIN. Okay, so let's look at this. PE ratio's in line, a little bit high. Yield got a little bit. Look at this expense ratio. This is what I'm talking about. This is what I'm talking about. Let's look at this. 0.19%. That's what I'm talking about. So $19 for every $10,000. That's pretty good compared to what, 80 I said. So that's way below my 0.25% baseline. Let's look at this. Performance. Look at this, 19%, 17%, 3 years at 12%. So it's more evened out. Okay, more evened out. But I'll take it, man. I'll take that. You know, you're not getting the super whoop-de on the year-to-dates, right? But on the 3 year, you know, and I'm a long-term investor. Depending on your investment strategy, you decide which one of these. Like I said, the other ones beat this one by big times. You saw the 30% on one of those, on a couple of those, right? So, but I'm long term, at least a 3 to 5 year range. I'll take that. So let's look at the holdings. Lots of financials. So it's balanced. Lots of financials, basic materials, consumers, technology, energy, industrials, defense. So this is a balanced fund. Let's do a little bit. Okay, Reliance Industries, banks, consulting. There's that Tata again. Banks, consumers stuff, finance companies. This is designed to measure the performance of Indian large and mid-sized stocks. So for me, FLIN is the winner considerably by a long shot, just because, you know, at the end of the day, the expenses kill me. And the expenses would eat my profits up, and I do not want that. Even if the 3 to 5 year total return is 12.13, which I'll pretty dang good, I'll definitely take. So to me, FLIN is the winner. And of course, don't just go by that. Deep dive into it, right, and look at the companies, do research on the companies, see what, you know, look at their company profiles, look at their websites, whatever, and see what they're doing, understand the business. As a matter of fact, I did a deep dive on this ETF, FLIN, so if you want to see that, I'll leave a link up here somewhere to where you can check out the deep dive, as well as I'll leave a link in the description below, and if I'm lucky, I'll put it right here to where you can see the video right here. Thanks a lot for watching, guys. Appreciate it. Like, comment, subscribe.